Hey, what's going on, YouTube? It's your boy, the Stock Dude, back once again with another hot video. Today is September the 12th. The year is 2020. For those of you that are brand new to this channel, I recommend that you hit the subscribe button and turn on your notification bell. That way you will not miss another video and you'll be notified as to when the newest video drops. Now, last week I recorded a video, and the name of that video was called The Big Whale. So I made this video called The Big Whale, and incidentally, if you have not done so, I recommend that you watch that video called The Big Whale. As a matter of fact, I'm going to put a link in the description of this video that will enable you to watch that video called The Big Whale. Very good information. I think you will like it very much. But anyway, I made this video called The Big Whale, and in that video I made the comment that it is very, very important for each of you to learn how to read a stock chart. I expressed that it was extremely important for investors to learn how to read a stock chart. And if you don't know, I suggest that you stick around, because after I made that comment, it dawned on me that it's a real big possibility that a lot of people don't know how to read a basic stock chart. Now, stock charts, once you learn how to read them, can give you some really good information and possibly tip you off as to when to get into or when to get out of certain stocks that you may own. Especially the get out of part, because when your favorite stock starts to tank and crash in value and starts going down, day after day, learning how to read that stock chart can save you hundreds, possibly even save you thousands of dollars. So in this video, I'm going to show you how to read basic information on a stock chart. So stay tuned. Like I always say, I am not a stock expert, nor do I play one on YouTube. So any information that you get from watching this video or any other video, please, and I say please again, do your own due diligence before you put your hard-earned money at risk. So, in order to learn how to read a stock chart, the first thing that I need to show you guys is how to understand candlesticks. And a lot of people probably wondering, hey, what is he talking about? Candlesticks. I'm not going to be a butcher, a baker, a candlestick maker. Why do I need to learn about candlesticks? The candlesticks that I'm talking about don't involve a match and lighting a wick. Not those kind of candlesticks. When I say candlesticks, I mean the candlesticks that's known as Japanese candlesticks. Let me show you something. This right here on your screen is two examples of Japanese candlesticks. Now, I wrote some information down for you guys to explain a little bit about candlesticks. Now, candlesticks, which you see on your screen right here, are used in stock trading. These right here are used in stock trading. Now, Japanese candlesticks, they originated years ago, believe it or not, as a way for Japanese rice traders to keep up with the prices that they were paying when they were trading rice back in the day. And it was a guy by the name of Steve Nissen. He was the one that brought this technique to the United States. Now, Japanese candlesticks are, you have to understand what these candlesticks contain. They contain 4 pieces of information that are critical, and I do mean critical, to you understanding what's going on with stock prices. Now, the first thing that a Japanese candlestick will tell you is the opening price, the price at which a stock opens when it starts to trade. Second thing that it gives us is a closing price. That's the closing price at the end of the trading day. Got it? The third piece of information we get from a Japanese candlestick is the high price, which is basically the highest price that a stock traded in that particular day. Also, we have the lowest price. The lowest price that a stock traded in that particular day. Those are the 4 pieces of information that every candlestick gives us. Now, you're probably wondering, well, what makes this one green and what makes this one's red? You wondering that, right? Say it again. I thought you was wondering about that. What makes this candlestick green is the fact that the closing price is higher than yesterday's price. If the closing price is higher than it was yesterday, it will have a green color on this candlestick. Got it? So what makes this green is yesterday's price is lower than it is today. That's what makes it green. So then, conversely, what makes this candlestick red is the fact that this day's closing price is lower than yesterday's. So once again, what makes it green? Today's closing price is higher than it was yesterday. Therefore, it is a green candlestick. What makes it red is today's closing price is lower than it was yesterday. In other words, the price went down today compared to yesterday. So this makes it red. So those are the 4 important pieces of information that candlesticks give us. Once again, this green candlestick is green because today's price, the current day's price at closing, is higher than it was yesterday. Now, this is also known as a bullish candlestick. Got it? This is a bullish candlestick, which means that today's price is higher than it was yesterday. Now, another meaning which makes this a bullish candlestick is the size of it and the shape of it. See how it has a little wick? This is on the bottom. That little leg on the bottom is known as a wick. Small wick on the bottom, which means that the opening price was here and the lowest price was not far from where it opened at. In other words, it didn't go down a whole lot. And then you see the size of it. Big upper body, and then right here, a small wick on the top. This is a bullish candlestick. Conversely, over here, the red one, in which today's price is lower than yesterday's price. That's the reason that this is red. This is a bearish candlestick, which means it opened at this price and then the price fell and it closed right here, making it a bearish candlestick. You probably hear on television a lot of time where people will say on TV about a certain company. Oh, on Apple. Oh, I'm bullish on Apple stock. Or I'm bearish on Microsoft's stock price. What that means is when they say that an analyst says that he or she is bullish on a certain company's stock price, that means that they think the price will rise. It's going to go higher. That's what that means when they say I'm bullish on a certain stock. When they say I'm bearish on a certain stock, that means that they think that the prices are likely to fall in that particular stock. Got it? When you hear bullish on a certain company or bullish on a certain stock, that means that that particular analyst or person thinks the prices are likely to rise in the future. When they say I'm bearish on a certain company or I'm bearish on a certain stock, they think the price is likely to go down and fall in the future. That's the concept. Now, this bullish and bearish thing, we're going to talk about that for a second. The bulls and the bears. The bulls, when you hear people refer to the bulls are the people who think stock prices are going to rise. Those are referred to as the bulls. The bears, conversely, the bears are the ones who think stock prices will fall. Those people, those investors are referred to as the bears. Now, the way this whole thing works, the way that the stock market moves up or down is based on that simple concept. The bulls versus the bears. The bulls want to try to buy stock and push prices higher. The bears want to try to sell stock and force prices to fall. The bulls versus the bears are the reason that the stock market either goes up or down. Because it's like tug of war. The bulls and the bears are in a tug of war, pulling back and forth. I got money buying stocks. I'm a bull, so I'm buying as many stock shares as I can, trying to push prices higher because I think a certain company is worth more than what the price is trading. If you are a bear, then you have your money pushing stock prices down, creating what's known as a headwind, forcing prices down. So the bulls versus the bears is the way that this whole stock market works, because the stock game is just that. It's a game. It's a game that you, as I said last week, as a little fish on that video I made last week, you as a little fish get to play in the water, in the stock market, with the big whales, with the big fish. And it's a game. But the way it works, we don't have enough money in that game to really and truly affect stock prices going up or down. The millionaires, the billionaires with a B, and the institutions, in other words, the companies that buy and or sell stock, they are the big whales that make prices go up or down. But the entire stock market is based on that simple concept. The bulls versus the bears. Who gonna win? Tug of war. The bulls versus the bears. That's what it's all about. Now, I'm gonna go to my favorite website to give you an example of some charts. And we're gonna briefly go over how to read charts. I'm gonna give you an example of a company that I am bullish on. In other words, a company whose stock price I think will go higher. But wait a minute. Like I always say, I'm not a stock expert, nor do I play one on YouTube. I'm just telling you what I feel. But I got a good feel for things like this, because I've been doing it for a long time. I got a real good feel. And check this out. After this video, you are going to have a real good feel as well. Just want to remind you guys, while it's on my mind, to please, if you have not done so already, please hit the subscribe button and turn on your notification bell. That way, when the next video comes out from your boy, the Stock Dude, you will not miss a thing. So we're going to go now to my favorite website for learning how to read stock charts. My favorite all-time website. And we're going to check out a company that me, the Stock Dude, is bullish on in the future. This company, I think you heard of it, goes by the name of Facebook. Everybody knows about Facebook because everybody spends time on Facebook. If you don't spend a lot of time on Facebook, you spend a little bit of time on Facebook. But in any event, you do spend time here, or you have spent time here at one point or another on Facebook. Now, as I said, I'm bullish on the stock price of Facebook going higher. You with me? I'm going to tell you why I'm bullish on the stock of Facebook going higher in the days to come. I'm not guessing. I'm going to show you right now what I look for in companies to figure out and get a heads up by reading the stock chart, which this video is all about, showing you how to read that stock chart. Why I am bullish on Facebook. Start right here at the bottom of the page. You see at the bottom of this page, you see the months of the year. You see December, then you see January 2020, February, March, April, May, June, and so forth. Right here, last month, in the month of August, you see this big influx of volume. And when I say volume is basically just shares that's bought or sold. So you see this big red influx of volume. That is significant. If you look at the sizes of these volume spikes earlier in the month of July, see the height of them? See how they're kind of on the small side? And then all of a sudden at the end of July, you see that big influx of volume, that big volume spike, which turns out to be 3 to 4 times as large as the ones earlier in the month. Right here at the end of July, look at the size of it. That lets me know that people who have that right there, big money, they are interested in Facebook. Now, the reason that this volume spike is red or pink, depending on whether I have my glasses or not, is because the price closed lower than which it opened. It opened at a price, and then at the end of the day, it closed at a lower price. That is the reason that this right here, this volume spike, is red. So that lets me know that institutions, companies, millionaires, billionaires are interested in Facebook's stock. Because look at the price the day before. It's down here in the $230 range. Next day, when that big influx of volume came in, the price jumped up here near $258 a share. So it closed lower than it opened. So that made that candlestick, remember the candlesticks we talked about? That made the candlestick red because the price closed lower than it opened. Then you see the price tail off. And when I say tail off, I mean basically the price goes down. It sells off. Anytime you have a big move in a stock, a lot of times that big influx of volume, or the price jumps from here up to there, or from $20 up to $30. Stocks don't really like moving a lot all at once, is the best way to put it. A lot of times when a stock jumps higher in price by a significant amount, you got to think people bought that stock at a lower price. Let's say somebody invested in Facebook at $225. They had it for a week or so, and all of a sudden the price jumps from $225, which they bought right here, on up to $258. That could represent a lot of money depending on how many shares people have invested in Facebook. So you got to think, when a stock price jumps up a lot all at once in one day, from one day to the next a lot higher, it's something about money. Maybe you can help me with it. But when you have a big jump in your trading account balance, where you may have a gain of $1,000, all of a sudden overnight that gain of $1,000 goes up to $3,000, wouldn't you want that money? Unless it's like for retirement or put away, wouldn't you as an investor be tempted to take that money out? I think so. Now, millionaires and billionaires, they real people just like we are. Even if it's a company. If a company is invested in Facebook at $225, and then over the course of 2 weeks the price goes up to $257, that can represent thousands, possibly even millions of dollars. So just like we would want that money, they want it. So that's why stock prices gap up, jump up high, and then they sell off, because people are selling shares to gain their profit. So if you look right here, in August, the first week of August, you see another big green volume spike. See how that's a lot taller and a lot bigger than a lot of these small ones? That right there lets me know that millionaires and billionaires who have the money to buy thousands upon thousands of shares are interested in Facebook. And if you look right here again near the end of August, here you have another big volume spike, and another big one, which is not as big as the other one, but is still a lot bigger than normal. You have 1, 2, 3, 4, 5 big volume spikes, and even another one back at the end of June. 6 big volume spikes. That lets me know, the stock dude, lets the stock dude know that institutions, millionaires, and billionaires with a B are interested in Facebook. So my advice to you is to let this price continue to fall. And once this price falls to a level, probably with between 250 and 240 in this range, this is a level right here. Chances are, when that big green candlestick arrives and that price is in the 250 to 240 range and it turns green and it starts to go higher, there's a very good chance that Facebook will be bought by more institutional buyers. Now, as far as reading this stock chart, I like to take your attention over to the left hand side of the screen. Right here you see the word, well, the letters SMA, and then the numbers 200. SMA 200. A lot of people probably wondering, what does that mean? SMA 200 stands for simple moving average. The 200 stands for 200 days. So once again, SMA stands for simple moving average. The 200 is for the amount of trading days that they take that average from. So the SMA 200 is the average price of Facebook for a 200-day sampling size. The SMA 50 is the simple moving average over 50 days. And you guessed it, SMA20 stands for simple moving average over a 20-day period. Got it? That right there, when you find a lower average, in this case, I'll give you an example. Let's say this is the lowest average that we have of the three. Correct? Do like this. Say, yes, I'm with you, stock dude. All right. So when you have an instance where the lowest average, which in this case is 20, crosses a higher average. When a lower average crosses a higher average, that is considered a bullish crossover. I'm going to say it again. When you have the lower average, which in this case is the 20-day average, when it crosses the higher average, which in this case is a 50-day average, when the 20 crosses the 50, that is a bullish crossover. I'll give you an example. If you look down here in the month of, what is this, April, this magenta line, or purple, I don't know, I don't have my glasses, purple or magenta, depending on what you know, how you feel about it, not sure. You see right here, near the end, this 20-day, this magenta line crosses over the blue 50-day average. See it? Right here. That is a bullish crossover because the lower average has crossed over the higher average. And when it does that, it does it with momentum. And that stock trade momentum does what? You see the prices slowly begin to go higher. And if you look right here, in May, you'll see the 20 cross over the orange line, which is the 200-day. So right here in April, the end of April, you see the 20 crosses the 50. And then right here at the beginning of May, you'll see the 20 has now crossed the 50 and now crossed the 200-day moving average, beginning an uptrend. Got it? When the lower average crosses the higher average, it's a bullish crossover. Just like Tim Hardaway back in the day in the NBA, the killer crossover. That's what I call it, the killer crossover. Makes the prices go higher. That means over a period of time, the average price is rising. And as far as stocks go, we like rising prices. And if you notice right here, I told you guys I'm going to show you how to read basic information from a stock chart. This is ultimately the beginning and or the end of your trading account, whether it goes higher or lower. Can you read a basic stock chart? This is a basic stock chart. So the stock dude is going to help you read a stock chart. So if you notice right here in June, the end of June, you'll see this red candle comes up right here. If you notice, this red candle hits this magenta line, and then the next day it starts to tail off and the price goes lower. That magenta line that forced the price lower is known as a line of resistance. Got it? A line of resistance is what causes a stock price to go lower, and it's called a line of resistance because it resists the stock price going higher at that point. So it starts here, and then you notice the next day it drops down, drops down, drops down. Now this candlestick that I'm referring to, where is it? Right here. This is a daily candlestick. I have my chart settings on finviz.com. If you haven't done so, please write this down somewhere. That way you can visit finviz.com after this video is over, because this by far, in my opinion, to me, is the best thing smoking as far as charting stocks. I mean, I don't do anything without consulting finviz.com. FinViz.com. Wait a minute, that sounds like a commercial. Maybe FinViz need to pay your boy about this one. FinViz, holla at your boy, man, because I'm sending people to your website, man. Anyway, let me get back on track. I lost my head. As you notice right here, this magenta line is the price that magenta line is what turns this price and makes it go lower. So once again, I have my chart set on a daily chart. Each one of these candlesticks represent one day. If I was to click here and change it to weekly, each one of these candlesticks would represent 1 week's training. Same thing, if I click monthly, every candlestick that you see would represent 1 month's trading. But once again, I have mine set on my favorite setting, the daily setting. Each candlestick is representation of 1 day's trading. 1 day's trading. So this right here is a line of resistance. Price hits that line and goes lower. And if you notice right here on this day, you see the candlestick turns green. So that means that the price went down. On these few days right here, went down. And then it caught bids and turned it green. Now, when I say caught bids, I mean that people were willing to step in and buy this stock. That's what I mean when I say the price caught bids. Mean that people looked at Facebook on this day and said, hey, Facebook is cheap. I want to own Facebook, so it caught bids. People were bidding and buying the stock of Facebook. But look at this cyan, what is that, cyan? Blue, light blue? Let's just call it light blue. I think it's cyan, but I ain't sure. But this light blue line where the stock price stopped falling and caught bids and people were willing to step in and purchase, that where it stopped at on this day is a line of support. Got it? It's support because it supports that price and it comes to that line and stops. So just to recap, at the top we have that magenta line where price turned around. It's a resistance line because price is resistant beyond right here where it hit that line. It's going down from that point. It resisted the stock price going higher. So it's a line of resistance. Then it came down here after 2 or 3 days later, caught bids. Bids mean, you forgot already. Bids mean people were really willing to step in and buy the price. Once it caught bids down here at this light blue line, the cyan color line, that is a line of support. So the price came down and it stopped coming down and the price was supported right here by that line at that particular price. Then if you notice, stock price continues to go up, continues to go down, up, down, up, down. Now, just to give you guys another little extra nugget, this right here, always remember, I told my sister this too, just early today. Always remember this. Anytime that you want to invest in a company's stock, never, ever, ever, never, ever, never, ever buy all of your shares all at once. I'll say it again. Anytime you want to invest in a company's stock, never ever buy all of your shares all at the same time. Don't do it. Reason being, stock prices change every second. That's what stocks do. Go up, down, almost like doing push-ups. They go up and down all the time. So the reason you don't want to buy your complete position in one day is because you may pay $100 for a stock today, and then 3 days later it may be trading at $80, and you'll be $20 in the hole right off the bat. So anytime you want to buy shares in a particular company, their stock, buy them in increments. Now, to give you an example, let's say you wanted to buy 100 shares of Facebook. You would buy 25 shares at a time. So that means that 4 different days, 4 different trading days, you will buy 25 shares in 4 days trading. That way, you'll buy 25 today. If it was Monday, today is Saturday, so not today. Stock market is only open Monday through Friday. But let's say it was Monday, you would buy 25 shares on Monday. Then let's say you wait till Wednesday, you buy another 25 shares. That'll give you 50. Then let's say you waited till Friday and you buy another 25 shares. That'll give you 75. Then let's say you waited another week and you buy your last lot of 25 shares to give you 100 total that you wanted. So you want to make sure that you stagger your buys and never buy all of your shares at once. That way, if the prices go down, you can average your price down and make a better buy out of it. So once again, I will recommend waiting to see what happens at this point before you enter Facebook. Because if this support level, this cyan line, if this is not supported and it drops out of that channel, then look out, because Facebook can drop to 240, to 220, to 200. You don't know how far it'll fall. But you want to try to find stocks that are like right here. Anytime you invest, you're looking for this. See this trend line right here? It forms a channel. That bottom line of support, that cyan line, it forms a channel. And as long as Facebook's price stays within the top line of support, top line of resistance and the bottom line of support, it stays in that channel, prices will likely continue to churn higher. Now, how do I know that? Because prices in this channel have been doing that. Starting back here in March, it has been slowly grinding higher. So if it stays within that channel, chances are go to a higher level as well. So just to recap, we have the simple moving average 200-day, simple moving average 50-day, simple moving average 20-day. Those are very important. Once that lower average crosses a higher average, it can be the beginning of what's known as an uptrend. Now, volume. Almost forgot. I had to check my notes. Volume. When I say volume is just basically shares that are bought and sold. It is super, super important to get used to looking at the bottom of the screen, especially if you are using finviz.com. It's listed at the bottom of the screen, the months and the volume meters. Always check the volume meters, because these spikes of volume will give you a heads up as to when to get in or even get out of a stock. Always make it a habit when you go to FinViz to check the bottom of the screen and see what the volume was like. The volume is just the shares that are bought and sold. The larger the volume streams, the better. More volume means there's more interest in a particular stock. In this case, FinViz. So the volume spikes lets me know that millionaires and billionaires and also institutions are interested in this particular stock. In other words, the big dogs is what I like to call them. When the big dogs start barking, prices gotta run higher. That's just the way it is. As much as I would like to say that it's me and you that's causing stock prices to go higher or to come down lower, it's not. It ain't got nothing to do with you or me. We small fish. We the little fish in this game right here. The big ones, the big whales are the ones that's causing these big spikes in volumes. And that right there, ladies and gentlemen, is what causes stock prices to go up as well as down. Now, I just got to tell you again, as far as stock sites, FinViz is one of the best that I've seen. FinViz is special in this regard because they automatically draw lines of resistance and lines of support for you. They automatically draw it for you. The simple moving averages, as you see here, are automatically plotted on each stock chart's graph. And I can't state that enough. Always look at the picture before you invest your hard-earned money in stocks. Always check the picture to see what a stock trades like. It's almost like this. Let's say that you are a single male friend of mine, and I come to you and say, hey, look, man, I got this nice young lady that I want to introduce to you. She is perfect for you, man. Everything about her is perfect for you. Imagine if I told you that. Sooner or later, if I tell you that, if I was to tell you that, sooner or later you're going to ask one thing. You know what that one thing is? You're going to say, hey, you got a picture of her? What does she look like, right? Same thing for the ladies. I can't forget my ladies. If I was to come to you as a young lady and say, hey, look, I got the perfect guy for you. He's perfect for you. You need to check him out. I want to hook you up with him. Ladies, aren't you going to do the exact same thing that the fellas do? Sooner or later, you're going to ask, what does he look like? You have a picture. You got a picture of this guy that you say is the perfect one for me. What does he look like? Ladies and gentlemen, boys and girls, stock charts represent the pictures that we just talked about in that example. In other words, what a stock chart does is it tells you what the stock has been trading like. In other words, what a stock looks like. Now, as far as stocks go, I always say it like this. When I'm trading stocks, I try to look to the left of a stock. When I say look to the left on these charts, I'll give you an example. This right here represents Friday's trading. The last little red candlestick right here at the bottom represents Friday's trading. I always say look left. By looking left, you can get the heads up as to what could possibly happen in the near future. I'm going to give you an example. This is Friday once again. If you look left, you see right here, you see this big green candlestick. See it? This big green candlestick has come up and hit that magenta line. And that line is, what do we call it? A line of resistance. There you go. You got it. Hit that line of resistance. Price starts to immediately fall. The very next day, you see that red candle. That red candle is smaller, but you notice it didn't go up as high as the top of that previous day's candle, the green candle. That red candle opened up lower, right around $300, and the price fell. Now, when I said earlier, look left, had you been looking left, from here, you look left, you see that red candle. If you were to look left, and if this was the current trading day, this would tell me that prices are not guaranteed, but prices are likely to fall. Because why? I saw it to my left. When you see that red block come up, that red trading day, right here at that magenta line of resistance, that would tell me that at that $300 mark, prices are likely to fall. Let's say you own Facebook and you bought Facebook at, I don't know, $220. And here you are on this day, by knowing how to read a stock chart, which you guys now have a basic understanding of how to do. I think you do. We've been going over it. But by knowing how to read a basic stock chart on this day right here, you would have known by the setup of this resistance line right here against that candle, and the next day it opens up, you could have possibly sold Facebook and pocketed your profit from this range down here, 220, where you bought it at, and sold up here near $300, and could have possibly avoided all of the losses that you would have suffered on these days right here. How would you know that? Look left. Like I always say, always look left. And it tells you right here, all of the buying that we saw on this previous day has run out of steam. Now that red block comes in and it opens up lower than the previous green candle's high and closing price. That lets you know that the buyers have been exhausted. They have bought all the shares that they want, and the price is likely to come down. So once again, always look left. Now, as far as Facebook's chart, I'm looking at this high influx of volume right here in August. Even though the price is coming down, being that this influx of volume is so big and so strong and massive right here, the big dogs, the institutional buyers, the millionaires, the big billionaires likely will be back. And the reason I say they'll come back is because the stock game is just that, a game. People that have millions and billions of dollars to invest, they like to buy a company's stock at a reasonable price. Now, when this price gets high, right here at $300 a share, people that have money are smart when it comes to spending it. So it's a game. They'll likely wait and let the price come down. As you see here, it's coming down, 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 down. And they'll find an area of support where the price is supported. As you see right here, that red block is right around the 240 range. That red block is around the 240 range. Price goes down and then it goes up, comes down again and it goes up. And once it closes right in this range, you'll see that little stick, that little tiny leg, that little tiny leg right there. That forms a support level. Once it breaks through a resistance level, it finds a support level. So it's a good chance that once this price comes down to either this $260 support level or possibly the $240 support level, what you want to do then is wait for a big reversal candle. As a candle as you see right here, one maybe that size, or a candle like this where it has that leg on the bottom forming and holding that area of support. Once this falls in price and comes down around this level, you're looking for one of these candles at the end of this string of red candles, or a big candle like that. Once you see that, that's what you call a confirmation reversal candle, and chances are prices are likely to start to move higher. Now, I'm not guessing at that. I'm looking at the chart. Look at the chart right here on your screen. This right here, those big volume spikes are telling me that big money, the big dogs, are interested in Facebook, but they're just allowing the price to come down to a cheaper level in which to come back in with another big volume spike and buy Facebook's price stock at a lower price. Now I'm going to go to show you, this is considered a bullish chart, and it's bullish because stock prices have been rising since March. Now, if you don't know, March was right there where we had the issue spiking with the coronavirus. We're still dealing with the coronavirus currently now in September, but right here in March is where we start having the shutdowns and the economy came to a screeching halt. So pretty much any stock that you pull up, you will look and see something similar as far as prices falling in March. So this is a bullish trend for Facebook. Now I'm going to take you and show you a bearish chart pattern. Going to another stock that I know you heard of by the name of Visa. Visa, y'all know Visa MasterCard. Now this is a bearish chart pattern. In other words, the price is likely to fall. If you go right here, this last candlestick right here on the far right hand side, that little tiny candlestick, that is Friday's day of trading, where Visa stock opened at $201.58, had a high of 202.41, and the low price that Visa stock traded was 198.91, and the closing price was $200.68. Now, let's say that you wanted to invest in Visa. I would tell you, just like I told you a few minutes ago, before you invest, always look which way? Left. Always look to your left, because looking left to the past days trading of a particular company's stock may, not always, but it may give you a heads up as to what you can expect in the future as far as stock prices go. Let's say you wanted to buy Visa stock and you say, oh man, Visa's trading at $200.68. It was a lot higher than that in February. Look, it's up over $200 and some in February, right around 212, 213 in February. You may look and say, oh man, Visa's 200. 200 is cheaper than 213, 212 range, so I'm going to buy Visa. I would tell you to do what? Look left. Look to the left. This is Friday's trading, the most recent day of Visa's stock trading. If you look left, at the beginning of September, you will see right here this green block. That green block represents the last day of Visa's price going higher. It ran into this magenta color line, and that's known as a line of, starts with a R, resistance. You got it. Y'all getting this stuff, man. I told you I was going to teach you how to read a basic stock chart, and I'm coming through on my promise to you. So this green block represents the last day that Visa's price traded higher. That magenta line, if you notice, that's the line right there where the price came down. Next day, if you notice, this is very key. Pay attention to this. You see this green block. The top of it is the price where it closed at for that day. The bottom is where it opened. This red candle is your reversal candle. That candle right there is the whole reason why I tell you to look left. Because that candle, when it started, it opened up right at that line of resistance and the price went lower. It opened at the top, went down immediately. When it went down below the bottom of that green candle, basically that took out the support price level of Visa stock at that level. So when that price closed below the bottom of that green candle, that basically took all of the support away from the price of Visa at that level. So instead of it closing right here, this red candle took out the lows of the bottom of that green candle, causing the price to go down. So the price has been going down off and on since then. So Friday, had you been looking to get into investing in Visa on Friday, I would have told you, look left. You would have saw, by knowing how to read this stock chart, that Visa's price is likely to fall. So my advice to you, being that you look to your left and see that big red candle, telling you, that's giving you a heads up, telling you that Visa's price in the near future is more likely to go down than it is likely to go up. So this is a bearish chart pattern right here for Visa. Now, I'm going to go to a stock that I am currently invested in. And remember me telling you that if you learn to read these basic stock chart patterns, it can save you hundreds, possibly even thousands of dollars, because these candlesticks will give you a heads up as far as which way a stock is likely to go in the near future. This other company is a company by the name of Peloton. Y'all heard of Peloton, right? The bicycles, the exercise bicycles and stuff with little wheels on it, and you get to ride the bike and you get to do, you know, the deal, yada 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 yada. Peloton. Now, Peloton is an excellent company. Excellent company. I personally am invested in Peloton and made good money on Peloton. But Peloton got a problem that has recently been brought to my attention. Once again, each one of these candlesticks represent 1 day's worth of trading. See this big red candlestick right here on the end? You see it? You see it? You right there. I'm talking to you. You see it? All right. See that big red candlestick right there? That is Friday's trading, where Peloton opened up at $97.99. The high price was $98.11. And then the low price was $83.58. Peloton closed at $84.04. Now, let me explain this to you. There's a big difference in price from where Peloton opened to where it closed. It opened at $97.99, basically $98. But it closed way down at $84. You get it? That's a big drop. It opened at $97.99, but then it closed at $84.04. That's a big swing in price. That's over $12 in price difference. So that right there, that big red ugly candle, tells me that in the near future, Peloton, the price of that stock is going down. I ain't telling you what I heard. I'm telling you what I know. And the reason I know that Peloton's price is going down is because the way that this candlestick is. Remember I said look left? This big ugly red candle right here. And it's red because the price is lower that day, which was Friday, than it was on the previous day, Thursday. The price is lower. Now remember I said look left? Always look left. Look left. So looking left, this is Friday, the big one. Looking left is this red one. That red candle right there lets me know that on this day, Thursday, that's where the downward pressure started. The bearish pressure. In other words, the bears, like we talked about earlier, the bears, the one that want this price to go down. That's when the bears took control of this price on Thursday. So seeing that reversal red candle on Thursday, and then on Friday, this big reversal confirmation candle, those two candles right there back to back, that is telling me, ladies and gentlemen, boys and girls, that my stock Peloton is likely to start falling in the near term. Another heads up that reading this stock chart has told me is right here. This big bearish candle, big red candle, and this volume spike for that big red candle is letting me know that a lot of money is possibly coming out of the stock of Peloton. Reason I say that is because of the size of this bearish candle. It went up to the high, which is that little tip on the day before's candle, which is Thursday. Went up to the high. It rejected that area, which means the price started to fall. So the price fell bad, all the way from 97.99 down to 84.04. And that big spike of volume lets me know that big dogs are pulling money out of the stock, and they're going to let this stock come down until it finds some area of resistance, maybe between $60 and $55 range, and then they're going to come back into this stock, buy it back up, and push the price of this stock of Peloton higher. But as of right now, the most recent candle and the most recent influx of volume coming out of this stock, if you look, you'll see the average volume is 9.65 million shares. Average is what the average trading is for Peloton. But look at this. On Friday, this big red candle on Friday, they traded over 87 million shares. Let that sink in. The average is 9.65 million. But on Friday, they traded over 87 million shares of Peloton. Now that, coupled with the big red reversal candle, that volume, all of these shares that traded, that's telling me, it's giving me, your boy, a heads up to let me know that Peloton stock is coming down. That, ladies and gentlemen, is how you read a basic stock chart. And I cannot stress it enough. You got to practice reading a basic stock chart, because it will save you hundreds, potentially even thousands of dollars, because these candlesticks, they're giving you the heads up. In this case, this is a stock that the stock dude owns. I own shares in Peloton. Is telling me, hey stock dude, hey man, we taking the price down, dog. We taking it down. It's telling me. So I now, as an investor in Peloton, I have a decision to make. Am I gonna hold Peloton, which I am fond of, or am I gonna sell it and come back into it at a lower price? I ain't sure yet. I'm still thinking about it. So at least I know and I see that lower prices are in the near-term future of Peloton. Now, Peloton is an excellent stock. I don't want to scare you guys, but this price coming down, believe it or not, is a good thing, because it's an excellent company. Now, right now, we're in the middle of this pandemic, and due to the effects of the coronavirus, Peloton will continue to benefit and grow from increasing their user base, increasing their sales. And Peloton has been compared, believe it or not, to Apple. And the reason it's compared to Apple is because Peloton, just like Apple, they offer a lot of services with these exercise bikes. So Peloton is going to make big money off of the services that they sell with owning a Peloton exercise bike. So Peloton will continue to benefit and grow their membership going forward. Now, a lot of you probably do not own Peloton, but I say again, Peloton is an excellent stock and company to own shares in. If you do not have shares in Peloton, I would advise you to use this big red candle to your advantage. In other words, let the price of Peloton come down lower, and you can grab you some shares of Peloton at a much lower price, and I give you my blessing. Just to remind you all, if you have not done so yet, I recommend that you please hit the subscribe button, turn on your notification bell. That way when the Stock Dude drops another hot video, you will be alerted and notified, so you will not miss a thing. I'm the one known as the Stock Dude, and I will holler at you later and practice reading this basic start chart located on finviz.com. I'm the Stock Dude, and I'll holler at you later. Look left